Hey guys, Winston here with findyourflow.tv, and I've got my good buddy Jason here. Jason, welcome to the show. This is the first episode of the first interview, and I want to bring somebody very special to the show today to go over cash flow, because Jason is a certified financial planner. I've known him for about almost 6 years
Almost 6 years, yep.
As a jiu-jitsu, some senior to me, a brown belt right now, one stripe.
Actually, I washed my belt, so I don't remember how many stripes I
Okay,
have.
he may be down a few notches there, but somebody I've always looked up to as a martial artist and a person. I really appreciate him being on the show. And so, Jason, tell us a little bit about yourself. Thanks for being here, buddy.
Well, thank you very much. I'm going to remember what you said. No cursing, no inside jokes, that sort of thing. So I'm going to keep it brief. I've been a certified financial planner for 15 years. I worked with a number of really large Fortune 500 companies, mostly military service providers. I am done with that now. I'm working with small, independent, registered investment advisory firms and kind of branching out on my own at this point. So that's really freed me up to say what I want to now, rather than what the corporations that I work for want me to say. Before, I would not have been allowed to make an appearance like this. So I'm actually really happy to be here.
Awesome.
Extremely happy to be here.
That's fantastic. Yeah, I know you have kind of broken out of that. So this is you being able to share stuff that maybe other folks in that industry might feel like they wouldn't be able to share because of their job security or job position. Is that right?
That and look, I just have a pretty. I've always had a pretty active BS detector, and the financial industry is full of more BS than any other industry on the planet, other than maybe being a used car salesman. But at least when you go to a used car salesman, you know exactly what you're getting into. A lot of times when you walk into an investment advisory firm or something like that, you trust the person that you're there, you respect them as a professional, and I'm here to tell you that is not necessarily the case. They are not necessarily on your side. They're not always acting in a fiduciary capacity, even when they say they are. They're there to make money for their firm, right? Now, there's nothing wrong with that. That's the way capitalism works, right? Mike? And they're out to make a buck. You're out to make a buck by investing. But I think my purpose now, while I'm working, is to kind of educate the people that I work with, to give them the tools, give them the weapons they need to fight for their own financial future, and to really understand what's going on in the markets, understand the financial decisions they're making, and how basically not to get screwed by these bigger companies. All right.
Wow. Yeah.
Yeah.
It's deep. That's intense. So so what does that look like? What kind of things, if you had to kind of summarize? Well, I mean, that was a summary of it, but I guess where would you start with somebody who's coming to somebody as a financial advisor and looking for financial direction? Maybe they're not the multi-millionaire yet. They're kind of earlier in their life. Where would you point somebody?
Well, number one, you need to understand where you are financially. And a lot of people that I speak to, granted, when you work in the financial industry, let's say you worked in a bank, right? Okay. And you worked in a bank and you were there to recruit their clients and do investments for the bank. You would maybe speak to 3 or 4% of the people in that bank, because those are the only ones with money, right? So those are the folks that have made money. They've already got it. They know how to make it, and what they're trying to do is grow it and preserve it. If I'm talking to folks that are not in that position yet, the thing that I would advise them to do first, say, if you don't have any money and you want to get to a point where you're speaking to an advisor because you're in that 3 or 4% of the population that has $100,000, $500,000, $1 million in assets, and you want to invest in the markets or put in the real estate or something like that, then you really need to understand your current financial condition. There's a couple of things that you really want to think about. Number one, you need to know exactly how much you're bringing home every month. And you'd be surprised how many people have no idea how much they're bringing home every month. They don't know what's going to taxes, what's going to their benefits. They don't know, they just don't know what they're being paid versus what's coming out of their check before that ever gets to them. So that's number one. Number two, you need to have a budget. Now, budgets don't necessarily work for everyone when you get further up in that income level, but if you have 2 or 3 jobs right now, and 2 or 3 part-time jobs, you don't work anywhere full-time, you're barely making it, you're barely scraping by, you probably still have room in your budget to create savings and to use that savings to create wealth. When I was a young man, a really, really young man, like in my early 20s, I actually made pretty good money, but not Like, I mean, I did a lot of really dirty and dangerous jobs to get ahead because I knew that if it was dirty and it was dangerous, someone would pay me more. I did things like I worked on a deckhand on supply boats that ran supplies out to oil rigs. I worked as a welder's assistant in oil refineries, which that literally I literally was dressed in an orange Nomex with a giant bag, was catching like pieces of molten metal falling down from the catwalk above me. Like it was one of the, I mean, it was horrible, but
yeah,
I mean,
it's pretty bad.
I was 18 years old, and this is a long time ago, and I was being paid like $15 an hour, which back then that was a lot of money.
Yeah,
it was a lot, but it was 110 degrees, and I'm getting hit by hot chunks of metal the whole time, right? Yeah. But I talk to a lot of young people though, like. When I sit down and look at their budgets, because I always do this for my friends. I sit down and look at their budgets and I say, what can we eliminate to start creating free cash flow? There's always a lot to eliminate when it comes to free cash flow. Subscriptions are the number one thing that I look at.
Yeah.
Subscriptions, right? You can save thousands of dollars a year on subscriptions, right? There's always something you have. You have a Netflix membership, you have a gym membership that you don't use. You have some sort of software that you pay for that you don't necessarily use. All kinds of things. I have a subscription to a website called Fish Dope, which Fish Dope. It's not what it sounds like. It actually gives me information on where to find fish. The problem is I only use it 3 months out of the year. Right? The other 9 months I'm actually working instead of fishing. Right? But you can always look in your budget and try and find ways to save money. Yeah. You can find them in the most unlikely of ways. Last year, my wife and I decided to cut out our garbage service. Almost everyone in San Diego, garbage service is free, right?
Except for where
I live, we actually pay for garbage service. But because I own a couple of businesses here in town, and I pay for garbage system or for service through the businesses. And we compost at home. We were only making one 13-gallon bag of garbage per week. That was it, and paying $50 a month for garbage. And so we decided that was one of the things we're going to cut out. And once a week, I was going to take the garbage into the academy and throw it away there. Yeah. Take it into my business and throw it away there. Yeah. It was a simple way to cut back on business. Yeah. And there's all kinds of ways you can save money like that.
$600 a year, boom.
But people only think, oh, it's only $10 a month, it's only $50 a month, it's only this. Yeah. And of course, there's always the obvious thing. And the trite thing, the one thing that everyone always talks about, which is don't go buy that $5 cup of Starbucks every day. Right. That's something you can cut back on. I had a client years and years and years ago. She was a very, very nice young lady, extremely attractive. I can't remember her name right now, but she went and got, while she was working Monday through Friday, 2 cups of Starbucks every day. Okay. She worked as a new accounts representative in the bank at the time, probably made $30,000 a year. It worked out to being close to $3,000 a year that she was paying to Starbucks. Wow. Is literally 10% of her income was going to Starbucks. And she didn't realize it. No one had ever broken it down for her on paper that she was spending that, at least that amount each year, if not more. And so there's always, understanding your budget, understanding all the leakage in there is really, really important. One of the best ways to do this, one of the best ways to understand how wrong you are about your budget, is to write everything down on paper first. Just write it all down on paper and say, this is my budget. This is what I think I'm spending every month. And then you go out online and you go on to like mint.com or there's a bunch of software services. I'm not being paid by any of these to promote these. In fact, I can't even remember them off the top of my head, but there's a bunch of software services that you can use now that will actually track your spending. And I've even done this with myself, where I have an idealized budget. This is what I think I'm spending, and I compare it to what I'm actually spending. Yeah. Oh, and there's a hole, and it's usually a couple $100 per month. Dang. Yeah. But finding that couple $100 a month instead of throwing it out the window. Yeah. Now I'm putting it somewhere where it's working for me. Right? Every month I save money to invest, and I've done that every month since I was 18 years old. Nice. As long as I wasn't starving and checks weren't bouncing, I was saving money every single month. Yeah. So nice. That's where you can start, is by really, really understanding your budget. Right? Nice. Yeah. And the third place, I think that developing the habit of saying no is almost like a superpower. It is. Almost like a superpower. You have to learn how to say no to yourself, and you have to learn how to say no to your friends. Yeah. And those are the two things. You need to decide ahead of time, how many times am I going out this month? How many times am I going to go out to the bar this month? How many times am I going to go out to a restaurant this month? Put that in your budget. Everyone needs fun in their budget, right?
Fun.
If you're really like on the line though, then you can't afford fun, right? But a lot of people can afford fun once a month or twice a month. They really can't afford it more than that. But when I look at like especially young millennials, I routinely find that between groceries and eating out and drinking, they're spending about $900 a month on food.
Wow.
And food entertainment.
Yeah.
And that's something like a quarter of all discretionary spending actually goes to convenience food purchases in the United States.
Wow.
Right. So instead of people, making food at home, they're eating out, or even if they eat at home, they're eating prepackaged food that costs a lot more instead of making something themselves.
Mm-hmm.
So
yeah.
My wife and I had kind of an awakening experience in 2008 where I totally got screwed at my job, and the company that I worked for cut my compensation package by like 2/3 on what was called managed money back then, and they could do it at the time because it was in the middle of a financial crisis.
Okay.
What was I going to do?
Right.
They're like, and literally, they're like, yeah, what are you going to do about it? Go get another job? It's 2008,
Yeah.
And so my wife, my wife and my daughter actually lived on $25 a week in groceries.
Wow.
For about a year and a half until my financial situation improved, and then I started making more money again. But one of the things we learned was that it wasn't that bad. I ate a lot of rice and a lot of steamed vegetables and very little meat, and it wasn't that bad. And I lost weight doing it too. That was like, so I'm eating a healthier diet. The next time I went to the doctor, my cholesterol levels look better, my triglycerides are down. I'm like, and it was we ate fresh vegetables. We didn't buy anything that wasn't on sale. And I tell you, that wasn't the beginning of us saving money, but that was the beginning of my wealth really starting to take off. Is when I really learned that we were wasting so much money by simply not insisting that everything that we buy be on sale. Like then we had to do it. We didn't have a choice.
Okay.
Right?
Yeah.
But after that, it became a real pleasure to do this.
Yeah.
It did. Like my wife and I compete now to see who can be the cheapest.
Okay, yeah.
She wins.
Yeah.
Always wins. Right? She's just much better at it.
Yeah.
And much more disciplined than I am.
Yeah.
I'm always gonna take some sort of break there,
Yeah.
But it became a game between us to where see who could save the money, who could get the best deals. And I got to the point now where I give up. I don't even do any shopping. I let her do it all because she always does better. But that was really one of the keys that kind of turned us around and really put us on the path to earning more and more wealth. And to the point now where I'm semi-retired. I do what I want to now. And this is kind of what I want to do. Yeah. And you're getting there yourself. You're working on that path. You're hitting that exponential curve, and where we all start to make more money from passive income sources, and we make money while we sleep, and we don't have to worry about our future so much.
Yeah. Amen.
So
Yes. Absolutely.
Yeah. So one of the things that I wanted to talk about today, if you have time, is, or if this is what you wanted to talk about, was all of the market volatility that's going on right now, everything surrounding the coronavirus and how it's affected stock markets, everything with the election and how it's affected stock markets. And I really wanted to bust some myths and tell you that none of this is a big deal. And if it is a big deal, then the stock market's really not going to matter. So, okay. All right. So,
okay.
All right. So look. So this has really been historic volatility in some ways. It's only historic for people who haven't lived very long, or for people who haven't been involved in the stock market for very long. If you're old like me, or if you have a historical memory like me, because I'm a giant nerd and I study things like this, this volatility that we're having is perfectly normal. It's the fact that we haven't had a really big correction or recession since 2008. That's the real anomaly here. The fact that the market declined rapidly, 10%, 13% over the last couple. I mean, it's about 13% off of its highs for this year. That's not uncommon historically, and it's actually completely to be expected. I've been waiting for this to happen since about 2014. Like that's when we were 6 years into an up market. typically, if you had to say on average, it'd probably be a recession and a market decline every 7 years or so. But I mean, it's that's not saying that's every 7 years. Sometimes it's 5 years. Sometimes it's 9 years. But this has been the longest bull run in a really long time. What's called something called price to earnings ratios for stocks were really, really high. It's not necessarily an indication that there's a recession coming, but it's a good indication. But also something called the yield curve, where long-term interest rates actually drop below short-term interest rates for a while. That's called a yield curve inversion. That happened back in September, October at some point, and the Fed stepped in and they basically created money by buying back bonds out of the open market, and they injected cash into the open market, and they freed up some liquidity. They kind of saved something that was called like overnight bank lending or commercial paper, which is a commercial instrument that a lot of people don't think about, but it's very important for large corporations and banks so they can do overnight trading with each other. They kind of saved that market back in September, October, when the yield curve went inverted, and that's when there was the first real indication that there was an issue and that the market might be overheated and that there was probably going to be a pullback. But ask me what I'm doing because there's a pullback.
What are you doing because there's a pullback?
I bought a crap ton of stock.
Okay.
But part of it is I was lucky enough to have cash available at this time because I wanted to get a tax issue resolved before I put anything away. So when I say I've invested a bunch of money, under normal circumstances, that money would not have been available. It would have already been invested in the market, right? But that is to say that that you should be investing on a regular intervals, doing something called dollar cost averaging over time, which is you invest whatever money you have every month, and you don't try and time the market and put large chunks in. Timing the market is a loser's game. Over time, I can look at anyone's portfolio, and over time, and I'll show you that timing the market's not going to work out for you in the long term. And in fact, you probably saw one of my videos where we went through that. But what's going on with the coronavirus right now? The coronavirus was just a trigger. The reality is this bull market went on so long that you were going to see a correction of some sort. If the market is down 10, 15, 20% by year end, I won't be surprised. And but nothing that has happened in the last 4 days, 5 days, has convinced me that the economic future of the United States or the global economic outlook has changed at all.
That's good news.
I'm talking about in the long term. Over 10 or 20 years. Over the next year and a half, we could see some significant losses. We could see job losses. We could see a stock market decline. But my investments are sufficiently diversified across stocks. I have very little in bonds, but stocks, cash, and real estate, and income producing real estate. Not simply your primary home. I know for a lot of people, their primary home is one of their largest sources of wealth. But you should really be looking at real estate as income producing real estate as an additional asset class in your investment portfolio. If we see a recession that lasts for a year and a half, that's not something as a long-term investor that I'm particularly concerned about. I don't see anything that, like I said, that changes my outlook on the global economy or even the domestic economy over the next 10 or 20 years. I'm still very forward-looking, very technology-oriented, looking at the technologies that are going to disrupt the economy in the future, that are going to create new avenues for wealth. None of that has changed, because of the coronavirus. Is it going to hurt in the short term? Possibly. I mean, if you think about it, my jiu-jitsu academy is one business that would seriously be hurt by that. True. But ask me. I mean, I'm not really all that concerned. It's going to be a disruption for anywhere from 6 months to 18 months. Right. But because I've got multiple sources of income, any one of those or two of those can be disrupted, and maybe I have to tighten my belt. But I'm not going to be horribly disappointed by that. So, I mean, it's not that I'm not going to be horribly disappointed by that. I'm not going to be horribly disrupted by that. I can cut back on my lifestyle without a problem whatsoever. I'm always playing the long game. Always playing the long game. Now, I know that you've been doing a lot of real estate stuff lately. A lot of like privately traded REITs.
A little bit. And yeah, right now, so I've got one that I'm involved with through through some folks that I work for. That so that's been really cool, very passive, which is nice, and an opportunity to get into something that I otherwise would not have had the opportunity to get into. So that's been really, just a great opportunity. And so the big things I'm focused on right now are single family properties and multi-units on the East Coast, Pennsylvania, Pittsburgh. They're doing some building out there with new hospitals and good stuff that looks very, very promising. So yeah, that's the kind of stuff I'm into. And online technologies, as you were saying, I'm big into the marketing space and investing in that right now, which is very exciting time to be online and in technology and in marketing. So, the fact that we're able to do a show like this and, have startup costs and studio to get going, but be able to bring this kind of information. So, Jason, I appreciate you being here. And what kind of things, if you were to just kind of say, like, if somebody wanted to get a hold of you, if you were kind of if they wanted to learn more about what you do and how you help people, what would be a good way to get a hold of them?
Well, you can get a hold of me at jason@clientfirstcap.com. That would be the easiest way to get a hold of me.
Okay, fantastic. And I'm going to set up a special page for anybody that sees this episode that wants to learn more about Jason. You can go to findyourflow.com/Jason, and we'll put something there. I'm gonna work on him to hook up some kind of free ebook or something that we can squeeze out of him, and make sure that we get you guys something cool like that so you can learn more. Jason, thanks so much for being on the show today, brother. I appreciate it. And for all of you out there in TV land, thank you so much for tuning in. Be sure to subscribe to findyourflow.tv or youtube.com/findyourflow videos for more information, cash flow, Jason, and all that good stuff. So thanks so much, everybody. Take care. And until next time, my friends, be flowing.